Welcome back. There are about 2,400 homes scheduled to be auctioned this week. New South Wales will hold about 960, with about 830 in Sydney. Victoria will hold about 1,000, with most of them in Melbourne. Queensland will hold about 200, with about half of them in Brisbane. South Australia will hold about 150, with most in Adelaide. Western Australia, Tasmania and the NT will hold 22, and Canberra will hold 77. Taking a look at the most viewed properties going to auction this weekend, and in New South Wales, the top property is 26 Devine Street, Erskineville. This double street fronted townhouse has 3 beds, 1 bathroom, a large paved courtyard and a prized inner Sydney parking spot. The top property in Victoria is 24 Garden Avenue, Boronia. This 3-bedder has 1 bathroom, large dining and lounge room and an outdoor patio. Asking price is about $650,000. The top property in Queensland is 1 Doors Drive, Butterham. This large 4-bedder has 2 bathrooms, a big pool in the backyard and lots of parking for your cars and caravan. The top property in South Australia is 24 Frederick Street, Maylands. This 4-bedder has a lovely facade from the 1900s. It was extensively renovated in 2007. It's got 2 bathrooms, 2 parking spots and a pool. The top property in WA is 10 Centaur Road, Sunset Beach, which is in Geraldton. Now, this 4-bedder has been extensively renovated. It's got 1 bathroom, 4 parking spots, asking price $540,000. And the most viewed property on the REA Group website this week is St Albans Homestead, which was once one of Australia's premier horse studs. The address is 6-30 Homestead Drive, St Albans Park, which is a suburb in Geelong. This stately home was built in 1873, features 30 rooms, which have been meticulously maintained and modernised. The property holds a significant place in Australia's horse racing history. The legendary racehorse Phar Lap was secretly hidden here before the 1930 Melbourne Cup, after the horse was shot at while walking along the streets of Caulfield. Now, this property includes the main residence, guest house, tennis court, gardens and a giant stable complex with 30 stalls plus some paddocks. Land size is about 34,000 square metres. Asking price, $7.5 million. For more on property, I caught up with Eleanor Creagh from REA Group.
So we're seeing that auction activity is a little bit quieter this week than this same corresponding week last year. Certainly a little bit quieter in Melbourne, although we have seen that auction volumes have been pretty robust over the past few weeks, with interest rates falling again in May. Now, we are seeing that, of course, we're heading into that typically quieter time of year, so it is normal to see these auction volumes dropping off somewhat. And of course, on the demand side of things, the same goes. However, we know that market activity has been bolstered over the past 3 or so months, with interest rates falling in both February and May, really boosting buyer sentiment and, of course, pulling prospective buyers off the sidelines, with the expect of continued rate cuts throughout the year and a continued lift in home prices throughout the remainder of 2025, incentivising people to bring their purchase decisions forward.
All right, so stock levels coming down a bit, but naturally we are in winter. But how have clearance rates been holding up when properties are getting to auction?
We've seen that clearance rates have certainly been relatively robust, particularly with the uptick in auction volumes that we've seen over the past month. Now we've seen that clearance rates have remained pretty firm, and that's, of course, a reflection of the fact that we've seen that lift to home buying sentiment, with the additional rate cut in May providing a further confidence boost for potential buyers. And of course, we know with interest rates having been sustained at high levels throughout 2024 and now beginning to fall in 2025, many who were cautiously waiting on the sidelines to see what would happen are now moving their purchase decisions forward. We know that home prices have continued to lift this year after that softer period we saw into the end of 2024, with price growth turning around in those capital city markets where price growth, where prices have begun to fall into the end of the year. Of course, an added factor incentivising people to bring purchase decisions forward, with the expectation of prices continuing to lift throughout the year ahead.
Yeah, 2 rate cuts already this year. Market's pricing in a few more. Obviously, that's clearly going to give the property market a lot more positivity and a bit more positivity for buyers. But you mentioned property prices hitting a record high in May. Are there any parts of the country that are doing really well right now?
So certainly we're expecting that we're going to see 2 more interest rate cuts before the year is out, and that's likely to continue to bolster home buying activity. Of course, the very stretched affordability is a constraint, but at the same time, although population growth has moderated, it still remains strong relative to history, and we continue to have that chronic shortage of new home completions. So all up, we are expecting that property prices are going to continue to lift. With respect to that regional divergence, we're seeing that actually growth this year is more synchronised. Throughout 2024, the price performance was really characterised by very divergent performance across the country, with Perth, Adelaide, Brisbane the standout top performers, Melbourne, Hobart conditions being much softer, and Sydney being more middle of the pack. This year we're seeing that, of course, over the past year, it is those smaller capital city markets, Adelaide, Brisbane, Perth, that continue to outperform when you compare annual price growth. But looking at growth over the past quarter, we've seen that Melbourne has really started to turn around in terms of conditions and actually led the country in terms of monthly home price growth in May, with prices lifting just a little under 0.8% in May. That comes after a long and substantial period of underperformance for Melbourne. And with those softer performing markets now catching up, we're seeing that this growth upturn is more synchronised in 2025.
Eleanor Creagh, Senior Economist at REA Group. Thanks for coming on the show.
Thank you for having me.